Hey, what's going on everyone? It's Griffin here, and this is a video that I'm really excited to make because more and more I'm seeing interest and engagement with my real estate content here on my channel. Even though it might not get as many direct views, well, I'm seeing an increasing amount of people who are wanting to take action with real estate, which I think is fantastic. In my view, buying rental properties is hands down one of the best financial decisions that the average individual and investor can make to build wealth long term and work towards retirement. It's truly one of the best ways to actually make your money work for you. That is, if you purchase rental properties that actually make financial sense. This is especially true if you're still in your 20s or 30s because you have a ton of time ahead of you to get those hard assets paid down over time, potentially re-leverage them if that's something you're into to scale your portfolio at a quicker pace, but then also flow through many interest rate and market cycles, all of which make real estate investments fantastic for long-term compounded growth. But hey, considering the fact that we're now seeing property prices declining dramatically across the country, I've had an increasing amount of viewers and potential new investors reach out to me asking what my thoughts are on purchasing rental property right now during this transitionary market. Because the market really is transitory and uncertain right now. We're seeing increased interest rates leading to lower buyer purchasing power, yet inventory remains low and demand overall still trumps supply. So we're definitely in a strange spot right now and for the foreseeable future, with a lot of investors unsure of what the right course of action should be. This is especially true considering the fact that we've now entered a technical recession, and for the time being, there's no real clear indication as to when the market will bottom out, even though personally, I think this will happen over the next 12 to 18 months once we hopefully see interest rates starting to drop again. Hey, by the way, if you enjoy my content and want to see more of it, please take a second to drop a like on this video. It really helps the channel out. So to answer the question of whether or not it still makes sense to purchase real estate right now during this somewhat uncertain market, ultimately is going to come down to your risk tolerance as well as your goals as an investor and what type of returns you're expecting. Here's the thing though, generally speaking, when we see headlines stating the fact that overall property prices are declining and rapidly at that, well, this is grouping together all property types from rental properties being duplexes, triplexes, fourplexes, but then also actual primary use residential properties such as condos, freeholds, townhouses, semi-detached. All of these are grouped together, but the reality is that rental properties versus personal use properties are entirely different. When an individual goes ahead and purchases a personal use property like the ones we just spoke about, well then yeah, it never makes any sense to actually overpay on a property, and therefore interest rates are going to impact a buyer's purchasing power. But on the flip side, when it comes to rental properties, investors still have capital to deploy in the markets. Investors are always looking to create a return on that capital that might be just sitting dormant in a bank account with very low interest rates right now. So even if someone is going to, let's say, be creating a 5-6% return on investment yearly over just leaving it in a bank account generating 1.5% interest, well then that might still be a viable option. And that is why rental property price points are not nearly as impacted as personal use properties in terms of interest rate fluctuations. The bottom line is that in most large metropolitan areas right now, vacancy rates are still extremely low, and therefore rents remain high overall due to supply and demand, meaning property returns are still among the more stable investment returns in the market right now, other than say 3% interest rate in a high interest savings account, even with building values being in a transitory period right now. So those are only a handful of the reasons as to why on a good deal at the right price, I'm still not shying away from purchasing more rental properties and overall real estate this year and over the years to come. In fact, here are 5 reasons as to why I believe on a good deal, real estate still represents one of the best asset classes to hold long term. Number 1, it's an actual tangible asset that allows you to view the asset in question and estimate returns even before purchasing the asset in question, which allows you for more control and manipulation over the deal. 2, there are several ways to create a return on investment when it comes to real estate investing, from a longer term passive buy and hold strategy for cash flows and debt paydown to value add opportunities and even quite simply flipping properties. All of these are strategies that I personally used in my own real estate business with success. 3, rental properties offer a fantastic hedge against inflation, as generally speaking, the rents that you're going to be charging tenants will be increasing in parallel to the increasing cost associated with operating the property, and the building's value will also be appreciating over the course of time that you hold it. 4, income generated from stabilized rental properties that have quality tenants in them, while never 100% guaranteed, are generally going to be more reliable and higher for the same amount of capital invested on a relative basis than returns that you can can expect in the stock market with dividend stocks, for example. And finally, you get to leverage your capital, have others pay down the loan, and benefit from 100% of the appreciation. All of this is music to my ears. And so with this in mind, considering all of the long-term benefits of holding rental properties, if you have at a minimum a 10-year time and investment horizon for any property that you're picking up, and you've done your proper due diligence on the deal, you can't really go wrong here. Now, of course, considering higher financing costs right now as a result of increased interest rates, there are many long-term buy and hold rental property deals that may not be worth pursuing at all. However, I'm of the mindset that value add properties with the BRRRR method still represent a phenomenal opportunity for real estate returns. And so that's exactly why I went ahead and created this BRRRR real estate investing strategy course, outlining absolutely everything that I've personally learned over the past 4 years of investing in real estate myself, and including absolutely all of these strategies and tactics that I've used throughout these years to put in this course, giving you a full A to Z blueprint on how to go about investing in real estate yourself with value add and long-term strategies. If you're interested, make sure to check out the link down below in the description. It's a brand new course, that's why there are no reviews just yet. However, this is a fantastic course, I absolutely assure you, with over 4.5 hours of valuable video content. All right, now with all that said, if you're still interested in purchasing your first rental property this year, then the steps to doing so are still quite straightforward. Nothing has really changed. Number one, there is absolutely nothing more important than having a good finger on the pulse and understanding your market. That's why it's extremely important that you work with a competent real estate agent that is also an investor themselves and is able to give you better information about market rents, which areas are the best for investment returns, what average revenue multiples would be in given areas of your market, and so forth. It's also extremely important that you scour the MLS almost daily so you have a good idea of what deals in your market look like, what average price points are, what average rents are, and all of that other really valuable information if you really want to be a real estate investor. This pretty much all boils down to being able to properly analyze and quickly analyze what represents a good opportunity in your market so that you can pounce on a deal when it ends up hitting the market and not spending multiple days researching and having that deal fall through the cracks for you. Still in point number one here, it's also extremely important to actually niche down on the price range that you're looking to purchase a property for, but then also the exact type of property that you're looking for. Are you looking for a single family home? Are you looking for a duplex, a triplex? Knowing exactly what you're after is going to save you time and energy triaging the dozens of properties that come onto the market. Number two, you need to know as much as you possibly can about the entire property purchasing process, because financial literacy is paramount to being able to analyze as well as secure a good deal on your first rental property. Now, if you're really new to real estate investing, I would highly recommend that you check out my entire real estate investing playlist, as well as specifically the 12-step rental property, or really any property for that matter, blueprint that I've made on the channel. It's a 40-minute video going over the 12-step blueprint that I've personally developed and used to purchase every single one of my rental properties. Number three, you need to be financially ready to jump on a deal when it inevitably comes to market, a deal that fits within the criteria that you are after. So this requires a pre-approval letter from your mortgage broker, but then also having the down payment liquid and ready to go on that deal. So this entails working with a competent mortgage broker, increasing your credit if it's not necessarily above 700 points. That is really a ballpark estimate that you want to have your credit score above in order to secure the best rates possible. And then also saving up for your down payment that reflects the strategy you're after in the first place. So here are a couple of questions that you should be asking yourself. Are you looking to purchase the property with an owner-occupant loan? Yes or no? In this case, if that is the case, well, you need 5% down for a single family or duplex. If you're looking for a triplex, you need 10% down. That is something that needs to be considered in your strategy for saving up for a down payment. Number two, what is the price range of the building? Of course, that dictates your purchasing power as well as your ability to save up for said property and the amount of the down payment. Will you work with someone else on this deal, or will it be alone? Or is this going to be a partner, 50-50 partnership? All of this strategy needs to be defined ahead of time. I really cannot stress enough the importance of lining up all your ducks ducks in a row if you've been looking to purchase a rental property and getting into the real estate game over the past couple of years. The next 12 to 24 months, in my opinion, are going to be the most opportune periods in order to actually get into the market and get your foot in the door. Yes, property price points are depreciating right now quite a bit. That is average property price points depending on your market. Most rental properties are still not affected nearly to the same degree. But once interest rates do start dropping inevitably over the course of, in my opinion, the next 24 months, this is going to be a period where we're going to be seeing property prices stabilize and probably even start increasing once again. Again, knowledge is power here, so definitely make sure to check out all of the other content I've already released for free on the channel, speaking about how to save up for your down payment, as well as everything else from analyzing a deal to how you can leverage your capital and create massive amounts of equity in your property business. Number 4, if you're not in the position to get solely approved for a mortgage loan, if your income isn't high enough, then strongly consider actually working with a partner here. There's nothing wrong with going 50-50 with a partner on your first property deals and even growing a business over time. This is something that I have been doing, and it allows you to have double the amount of disposable income to qualify for loans and also put into new property deals. So taking the time to, yes, learn as much as possible, but then also strategizing your business and maybe even bring someone on could be a great course of action right now while you're saving up for your first down payment. And 5, if possible, only focus on value add properties where you're able to increase the property's value through aesthetic renovations, paint, trim, flooring, things that are quite easy to do, and or increasing the market rents, therefore having a direct impact on the value of the property that you're purchasing. Even considering the fact that average price points have declined quite a bit from the peak that we experienced a couple of quarters back, well, price points are still quite inflated compared to even a couple of years back. So considering this, well, generally speaking, I don't even believe purchasing turnkey properties that don't have any opportunity whatsoever for value add really makes sense in this current market. So again, you might be asking yourself what a value add property represents. I have a bunch of videos already on the channel going through actual value add deals that I've done in my own portfolio, going through all the numbers as well as walking through the properties before and after. Definitely check those out if you're interested. And also don't forget to check out the brand new course that I just released going over the BRRRR rental strategy, value adds, long-term appreciation, cash flows, debt pay down, speaking about everything that has to do with real estate investing, get you up to speed with all of the knowledge necessary to be a successful real estate investor, and backing this up with concrete deals that I've personally done in my own portfolio. So that's all I've got for you in today's video. I really hope you enjoyed it. If you did, make sure to drop a like. It really helps the channel out. Subscribe, hit the bell button for more real estate and investing content. And also, if you have any questions, make sure to comment down below. I'd be happy to answer them. Thanks a lot for watching, and I'll see you in the next one.